Corporate finance practice problem using Excel. Payout ratio, dividends per share, and dividend yield calculations. Get ready, it's time to take our chance with corporate finance. Here we are in Excel. If you have access to Excel and would like to follow along, note that we're in the Practice tab as opposed to the Example tab. The Example tab, in essence, being our answer key. Information on the left-hand side, we're going to populate that into the blue area on the right-hand side, calculating the dividends, the increase in retained earnings, the dividends per share, and the dividend yield calculations. Information, we have the earnings, which is in essence the net income, the payout ratio, which, as it sounds, is going to be the percent of the payout, meaning if we look at the income that we have, what percentage would be paid out, the paid out portion being the dividends, the amount not paid out then being the increase in the retained earnings. Then we're going to imagine shares outstanding at the 1,000, share price at the 170 to help us then figure out the dividend yield down below. So we're going to say, all right, then the dividends up top, we're going to say we're calculating the dividends. So if we have the earnings, and this is often going to be useful when we look at projections into the future to have this payout ratio on a percentage basis. So we're going to say the earnings is going to be the 551,000. The ratio for the payout ratio, in other words, is the 30%. Let's make that a percent, number group, percentifying it, then the font group and underline. That's going to be the dividends going out, the dividends, which is going to be equal to the 551,000 times the ratio of the 30%. So of the earnings, of the net income, the 551, 30% we're saying paid out. That means dividends at the 165,300 that we're estimating. Now let's take a look at the increase in the retained earnings. So what's going to be meaning if 30% of the earnings is being paid out, we're retaining the rest of it. That doesn't mean total retained earnings, but the increase in retained earnings from the prior years. We're looking at the activity that has happened. When we look at the balance of retained earnings, it would include the beginning balance as well. So let's take a look at the earnings. We can take then the earnings, and that would be the 551, and we can then think about the dividends that were now paid out. Dividends paid out at the 165.3, the dividends paid out, and that's going to give us then, I'll just call it our total down below, the total, which is going to be equal to the 551 minus the dividends of the 165.3. That's going to give us the 385.7. That's the increase in retained earnings, the amount of the earnings that we did not pay out. Now note, you can also think about that on a percentage basis. You might look at it this way. Let's do that calculation here. You might keep the earnings at the 551, but instead of the dividends, you're going to look at the ratio here. I'm going to say, all right, the ratio is going to be 1 minus 60% or 30%, which is going to give us, if I go to the number group percentifying it, 70%. So if we paid out, in other words, 30%, then we did not pay out 70%, and we can calculate that out. That's going to be the 551 times the 70, and you'll get to that 385.7. So however you like to see this, let's make this blue. Let's make this match the rest of our worksheet here so it all looks nice and neat looking. We want to make it neat. It's neat, both nice and neat in terms of interesting neat. So there we have it. So then we can calculate our dividends per share. So we'll look at the dividends per share. So let's take our dividends that we're paying out in total, which is now going to be the 165.3. And look at the shares outstanding, which we're going to just say for the example problem is the 1,000 shares that are outstanding. Therefore, how many dividends are going out, or what are the dividends per share? Now, of course, this is going to be important for a corporation. It seems like a basic kind of thought, but it's really a little bit confusing when you compare the entity of a corporation to a sole proprietorship or partnership. Remember that in a sole proprietorship or partnership, the partners, for example, would be able to withdraw what they want from the corporation based on certain rules, what they have in their capital account, and you can have different amounts that are going to be drawn out. When you think about a corporation, the fact that they are uniform in owning units, meaning the units of the shares are uniform, that's part of the benefit, that they're all kind of uniform, and part of the making them benefit or making them uniform is that the earnings have to be distributed equally. So you can't have one share getting more earnings distributed than the other on the corporation. So we want to break then the earnings out then on a per share basis. So we're going to go to the font group, underline, and just note you always got to keep that in mind. Am I talking about something that's going to be in total, in aggregate, or am I talking about a calculation that's going to be on a per share basis? So now we got the aggregate that we're breaking down to a per share basis. This will be the dividends per share, and that's going to be equal then the 165.3 divided by the 1,000, which will give us the 165. Let's add a couple decimals. Number group, pennies being added, 165 and 30 cents. So now we can think about the dividend yield given the market price of the 170. Remember that the 170 is not something that would be on the financial statements. It's not something that is determined by the corporation or the financials of the corporation. It's determined by the market. The market, of course, using the financial statements to make that determination. But this is something we're getting from the market price. If it's a publicly traded company, that will be kind of a known amount. If it's not publicly traded, then it's going to be a lot more, we don't know exactly what the market price will be. We might have to estimate it or take some appraisal or some kind of other method to get to what we would believe the market price would be. So we're going to say, okay, let's take the dividends then. The dividends at the 165, and then we're going to take comparing that to the price, how much would be paid for one share, we're going to say is at the 170. Let's add some decimals to these three tabs, selecting them, number group, adding a couple decimals. That's going to give us our dividend yield. Dividend yield, and that's going to be equal to the 165.30 divided by the 170, making that a percent, numbers group percentifying it, adding a couple decimals. We're at the 97.24%. Let's go ahead and underline, font group, and then underline. So again, we want to be able to kind of know the relationships between these calculations fairly well so we can get a good understanding of this equity section. The equity section is often, kind of a confusing component for, it takes a little while to get these relationships down to understand exactly what a dividend is, even though you work with it a lot, just to get it down to what it actually is, and then how it relates to the retained earnings, and then how it relates to the beginning retained earnings, and then how all that fits in to what it will look like basically on the balance sheet, and then the calculations on a per share basis also being, of course, important.